I am delighted to be joined by the chair of Citigroup. He's John Dugan. Thank you for joining us.
My pleasure.
It seems like the world is fractured, geopolitics, economically. It's very difficult for leaders to almost get on the same page, get along, and find a solution. After the horrific weekend that we've had and the 5 days of fighting, what does all of this mean for a big global bank like Citigroup?
Well, first of all, it means we focus most on our people on the ground in Israel, this senseless act of violence by the terrorists. And our hearts go out to our people, and we stand by our people. Thankfully, they're all safe right now. But that is our biggest, most important focus. And of course, we're monitoring and continuing to serve our clients, but it's our people on the ground that are first and foremost.
Could it change, actually, the world economy as we see this potentially escalating?
Well, we certainly hope not. We're watching it closely, and of course, it's already affected oil prices and commodity prices. But I think we're all just going to have to see how much this expands or not over time. We are in the ground in the region and other places in the world, and so far it is pretty contained to where the conflict has been. And that's certainly what we hope continues.
John, when you look at what your CEO has been putting in place, the restructuring, the kind of the big changes
Yes.
that Citigroup is going through, where do you end up in 1-2 years in terms of the bank?
So this is something that Jane has been very thoughtful about and decisive since her very first time on the job. We had our investor day very soon after she started and really laid out this vision for simplifying the bank. It had already been on a path like that, but to really much more simplify the bank and to do, starting out with divestitures of our non-U.S. consumer businesses, which we had all over the world, particularly in Asia, and that's well along now. And then secondly, in spending a good bit of time transforming our risk and controls and the operations and technology, supporting them, and really getting that underway. And this is what I would describe as the third leg of that stool of change to simplify the company, and it follows from the other two. So for example, by getting rid of and divesting all these non-U.S. consumer businesses, we don't need the same significant geographic managerial layers that otherwise were there, so it's getting rid of those. And likewise bringing some core businesses closer to Jane. So in 2 years, and I am getting to the answer to your question, in a couple of years, I think we believe it'll be a much simpler bank.
Right.
Our expenses will go down, our revenues will go up as a result of being simpler, and I think you'll really, despite this great investment in what we're doing in the transformation, those costs will begin starting to come down at the end of next year.
Is there a little bit of a bumpy road? I know you've also, for example, sold a big chunk of China unit to HSBC. Does that impact your ability to service clients in the shorter term?
No, not at all. In fact, it's a very smooth transition that we're going through. And we've had now coming on 9 closings of non-U.S. consumer businesses. I'm pleased to say those have all gone very smoothly. And we've gotten good premiums for the ones that have closed. And then in some other cases, we've had to engage in wind downs of the business. China's one of them. But this marks the ability to smoothly sell a chunk of the business. So I'd say all of that's going very well. And our business that remains behind, which is our core institutional business that we have all over the world, that's operating very smoothly. And this is not, in fact, it's making it easier rather than more difficult.
Because of the changes in restructuring, do you have a final number of job cuts?
No, we don't. I think one of the interesting things about Jane is she's quite decisive about the direction she wants to go, but she's also very specific about doing it in the right sequence. This is not about hitting a number. It's about making sure we get the roles right to simplify the company, to get the most efficient business that we can get out of this. Those numbers will come over time, but we're not targeting a particular number at this time.
So because of changing U.S. regulation, Basel, again, what are some of the changes that you'll have to go through?
Well, the most significant thing with Basel and what's going on in the United States is a proposal to significantly increase capital requirements for the largest banks that I will say somewhat bizarrely is a response to problems that happened with regional banks in March. We believe that it is an unwarranted proposed increase And not only because it causes us to have to hold more capital, but we believe it really will have a material impact on the amount of lending that U.S. companies can do generally, which is not a good thing when the economy is in more or less a precarious position, even though remarkably resilient. And it also pushes more activity, lending, and financial intermediation out of the banking system and into non-banks. And we don't think that's a good thing. We don't think it's a necessary thing. Our banks, our largest banks, including Citi, are very strong from a safety and soundness perspective in terms of capital levels, liquidity levels, and this is just unwarranted to have this huge excess amount of capital.
John, what are Citigroup's own relationships with regulators, of course, given what's happened a couple of years ago with some of the consent orders?
I think we spend a lot of time trying to maintain a very constructive relationship with our regulators. And I think, I can't put words into their mouths, but I think they believe we are doing our utmost to comply with the rules and the consent orders that we're operating under. But ultimately, what they want to see and what we must deliver are results, execution results. We believe we are, and people will see that over time, but that's really what the core of the relationship is about.
You see a lot of volatile markets. You see the cost of credit going up. There's worries about financial conditions getting even tighter. Is there anything that you see as odd in terms of market behavior right now, or something that you worry about?
From our position, I think we feel pretty good about our risk profile and the amount of capital and liquidity we have on the one hand, and the risks that we choose to take, which are really pretty prudent at this point. We're not heavily exposed to the commercial real estate business. We did not have interest rate sensitivity that caused us to lose a lot of money when rates went up significantly. So I think we as a bank are positioned really quite well. But of course, we're always watching markets. We see what's going on in the 10-year Treasury going up at significant levels. And we watch our credit card portfolio, which is enormous, for signs of what will happen to the consumer. We're seeing some cracks in the spending levels, and yet still very robust spending levels. So I wouldn't say there's anything extraordinary at the moment, but we, of course, are watching.
John, thank you so much for your time today. That was, of course, John Dugan, the chair of Citigroup.